I think it should be turned. All right, we are here. What's up, brother? Great to see you.
Good to see you too.
We're
It's
back.
been a little while. It's been a couple weeks.
I know it's been too long. It's
Mhm.
been too long, I say. But yeah, dude, like literally right before we started, we were talking about MSTR, which is had a insane parabolic move. I'll actually grab a part of my screen so we could look at it together. This is the one. And for anybody that's watching, whenever I do this, I have a pass-through IRA account, so there's nothing in it. But yeah, what do you make of it here? Because you and I we're talking about a couple different things. I think we have similar positions. I'm trading a little differently though, because I'm using a ratio call diagonal, and it sounds like you're mostly running long calls. Is that right?
Yeah. No, I'm mostly in leaps, and then some shorter expiries for January.
So you're out into 2026.
Oh, sorry. No, so not a full on leap, like a 6 or I guess 8 month
Yeah, okay,
calls.
got it. So
So
just kind of midterm
June.
options. Yeah.
Yeah.
Yeah, because it's funny, a lot of people they'll classify leaps like that, and sometimes it confuses me, but it's leaps are weird like that because I think another funny thing people mess up with leaps a lot is when they're talking to like an individual option, they'll call it a leap, and it's like leaps is actually an acronym. So the S is part of it, even S doesn't make it plural. So it's kind of a really stupid fun fact that nobody cares about. So I thought that I would share that with you because nobody cares about it. I thought maybe you might.
Yeah, I think technically, right, like it's a year longer in
It
expiry.
is. Yeah.
But I mean, so many people on Twitter just refer to them as anything longer than like, 6 months. And so I'm just like, all right, I use it colloquially. But yeah, no, I have the 6 month or like 8 month and then like 2 month calls. And I was telling you before, I was thinking of taking profit yesterday because the move to 490 was insane.
Mm-hmm.
It was just like an absolute parabola move. And I think it was just a market reaction to the oversubscription from the convertible debt. And today, there's hypothesis on Twitter, right, that today was a sailor hitting the ATM, uh, the at the market offering to try to raise more capital to buy more Bitcoin, which I get it. It's hard for me to say yes or no on that because the amount of options being played here, and the gamma increases volatility just inherently. And so I could see this thing correcting that much just naturally because it was way overextended, right?
Yeah,
So
it's super interesting. The move really started becoming parabolic. Well, this had like a couple notable legs up. But yeah, and that's actually one of the reasons why I have short options as part of my trade is like right now the volatility is implied volatility percentile on MSTR is literally 100%. So anybody that's buying options is at a point where they are as expensive as they can get essentially. Obviously this is looking at 30-day expirations. Longer term will be a little bit better, but just vol is super high. So what I found is you can actually collect a egregious amount of premium on just adding some short options as part of the equation. So what I do is I buy long options, not as far out as you. Right now, mine are out in 21 March. So I like to have them definitely a little bit further out in time. I normally will do at least 60 days. Normally like 90 is a better minimum. It kind of depends on what the trade is. And then I'll use a ratio. So I like to have multiple long legs that I can then sell at a ratio against it, the short legs, so that I preserve upside profit potential. I collect premium up front. Because if we take a look at,
so could you give me an example of like what that means? I'm guessing this is
I'll
like
show
a
you
credit.
exactly.
This
Yeah,
is
I'll
like a
show you.
credit spread, right? Okay.
It's technically called a diagonal.
Okay.
So yeah, so here, where am I at? I got the tree fitties. That goddamn Loch Ness monster asked me for tree fit. You watch South Park?
Not too often, no. I've
Damn,
watched some episodes, but I didn't grow up on it.
there's a hilarious one with the Loch Ness monster that's like a favorite of mine. And then let's do something like we need more strikes because this thing's too expensive. Yeah, we'll do something out here. Like, what do I have? I'm out here. This. So this. So something like this. So what this is long 10 of the 21 Mar 25 350 calls. And those were originally trading at 111.85. 111.85. And then the 20Ds 600s, these were trading for less. These were closer to like 28, call it. So the cool part about this is the outlay for this is what it is what it is. But then the short calls against it, they're nearer term in time. So you'll notice that the short calls in this example are here in the 29 days to expiration. This is when theta decay really starts to accelerate as you get within 60 DTE. So the reason why it's called a diagonal is because we're going horizontal and then we're staying on the same side of the equation on the call side, so to speak. So this differs, for an example, for like a traditional diagonal, just for concept, which is typically a 1-to-1 ratio. Now, this will still not have upside potential because of the delta differential that exists here. But if you have kind of a standard diagonal that's more at the money, they'll actually have upside risk where you can be too right, which that's like an offensive thing in my mind. Like I would be so beside myself if I put on a trade that literally I was too correct on, give or take, and then you end up losing money because it moves too far. I just hate that idea. So yeah, that's the ratio diagonal. So in this case, it's 10 longs against 3 shorts. So on the 3 shorts, let's just call it that, you get $30. So it's $3,000 per. So you get $9,000 on the shorts against the 100 and change for the layout on the longs.
Gotcha. Okay, that makes sense. And you're saying, when you're saying you're too right, that just means that what you're implying is that the price moves too quickly, too soon, and that puts you at a loss on those short calls that you sold.
It's
basically.
not quite that. I'll show you exactly what too right looks like. So when we're trading the diagonal on the call side, we're typically trading a direction if you set them up this way. But a standard diagonal looks like this. So what it is it's using the same strike, but across different expirations. So we're long the back, short the front, same strike. And you'll notice that if it goes too far, you can actually lose money. So the way that I trade ratio call diagonals, or just ratio diagonals call to the upside, put to the downside, is essentially for me to gain leveraged directional exposure. And it's a directional trade. I want something to go up for calls or down for puts. So I don't want the scenario where if Michael Saylor decides that he's going to start donating body parts to start being able to buy more Bitcoin, and this thing goes parabolic up, that I then have potential risk in the direction I think it's going to go. That's super annoying.
Gotcha. Okay.
Yeah, so that's the idea. But yeah, the main reason is with something like the short calls against it, it helps offset the theta that we pay to hold a long position. So for the long options, even if we take a look at them now, the 21 March, so they're 120 days out. So these still have like a bunch in extrinsic value. There's 74 delta, so it'll be a little bit less than this. But I mean, I would wager that they still have at least $7-8 per in extrinsic value that will bleed out. So each day, these are losing $53. So the idea is by shorting something against it like this, which again, I think these are what, the 6s I said? These are giving me $162 a day in theta. So it's a way for me to subsidize the carrying cost of the long options.
Gotcha. That makes a lot of sense. Yeah. That's that's genius actually, I think.
I've spent
Because I know
I've spent a
I know
lot of time building like the specific approach to ratio call diagonals. Like I have logs that I've built that even give me like what delta offsets I need in order to maintain the risk profile, how many shorts I can sell against the longs. Yeah, it's it's definitely something that I think is super flexible. But yeah.
what is the, what's your opposition though to doing something maybe a little simpler like a poor man's covered call strategy or just a pure like wheel strategy?
Well, wheel has a different profit mechanism than something like this. So a wheel is not going to be leveraged long. So I would classify them differently in a general sense. But comparing something like a poor man covered call, it's a poor man's covered call is very similar to this, where that's essentially another term for a diagonal. That's what a poor man's covered call is. It's just like the colloquial term to call it PMCC. But the big difference is that they normally don't do a ratio on these, and it's a big mistake. It's the same thing with the wheel, right? So it's why I trade something called a covered strangle versus the wheel. But if we take a look at the wheel, which is, let's just say that we're long a hundy, and then let's say we have our short call wherever. And so the context to the wheel is we sell puts until we get assigned. I'm kind of fast forwarding that part of the equation. I'm saying that we've already been assigned. We have our 100 shares, and then you sell calls against your shares. Here's the problem. When you're trading something like the wheel, it's a bullish strategy. You want the stock to go up. Think of the two ways you're trading this. If we're selling puts to get into this because we want it to go up, so here we have our short put profile, right? Capped upside profit potential, but we want it to go up. So what does that mean? Well, it means that if it does what you want it to do and it goes up, you're sitting there holding a pittance for what you could have made since it did what you want. So that's the first issue I have with the wheel using short puts to acquire shares. If somebody wants to do that, I always think of it as buy shares that you want. You can also sell the puts to capitalize on risk premiums and stuff like that. But I wouldn't wait to buy shares and try to get them at a discount by selling puts, because you can miss the move that you literally think you're going to get. And then eventually you're assigned on your shares. So then we have the put that falls off, we're long our shares, and then we sell a call against it. Well, guess what? We just capped our motherfucking upside profit potential again. The same thing that we think we want to happen. We want it to go up. We want it to go up as much as we can. And then you do the same thing where if it goes up, you now can't fully participate. So a simple way to fix this is just make sure that you have more shares. As long as you have 101 plus shares, it could be 150, 175, 200, doesn't have to be even lots. But as long as you have enough to not have uncapped shares, you preserve your upside profit potential. Because one of the things people mess up with, like the wheel, is you're assuming downside risk. You're holding the underlying. It can go down. So you're essentially taking downside risk, and then you're giving up the compensation for that downside risk, which is upside profit potential. Yeah.
And it also, I think, limits your flexibility, right? Because if the stock moves, especially like, let's say you're selling covered puts, cash secured puts, like every single week. And, like this week, for example, if you had sold them on Tuesday with MSTR at 490, 500,
right,
and then you'd sold them at 450 and now it's at 390. It's like, if you had just waited a few days, you could have gotten them for 10% cheaper, 15% cheaper. And now you're locked in. And if you want to close that trade, you'll have to close it for a loss. And
it's a double-edged sword. And that's the tricky part, right? Is because then who knows? MSTR could have gone up to 600 and then 650. Yeah. And then you're still in a similar scenario, though, where you collected your few dollars, you got your credit, but now it just made a massive run and you're just kind of sitting there like, awesome. Love this for me. Love this for me. Yeah. MSTR has been pretty wild. It actually popped up for me here because I normally don't trade a lot of this company just because of how it moves. I'll trade volatility around it, but it literally exhibited a standard breakout and it literally popped up on one of my scans. So I was just like, okay, time to, run the system and go to work. But you recently were talking about kind of like your quote unquote comeback, or like the way that you want to start coming back into trading and trying some different stuff. So what led you into this specifically?
Into the MSTR trade?
Yeah.
Yeah. So, well, I had extra capital I wanted to deploy, and recently, got more income, and so that allowed me to free up a bunch of capital that I had saved up that I had like in a rainy day fund. And
Got it.
so when I had that cash available in my, Fidelity account, I was like, okay, well, what can I do with this? And a lot of people on Twitter were talking about microstrategies, and it especially made sense given, the bull market that we were in. And so I started researching, and I quickly found like a lot of really compelling bullish arguments for MicroStrategy, especially considering their convertible bond strategy. And it was explained most brilliantly by a guy who's a bond portfolio manager. And essentially what he was saying is, look, there's trillions of dollars of capital in the world trapped in bond funds, and the bond funds are regulated in such a way that they can only buy fixed income securities,
Mhm.
treasury bonds, agency MBS, municipal debt, corporate debt. And so their like risk profile is very, very muted. And a lot of these bond funds, have been absolutely hammered in the last few years. So you look at TLT, you look at any long bond ETF, long corporate bond ETF, or long treasury bond ETF, and they've been, in the last 4 years, they've been absolutely smashed. And so those investors want to find like, a profitable trade. And in the bond world, that's hard to do because volatility is so suppressed, that making that money back is difficult. And what Saylor did with the creation of this convertible bond strategy was essentially say, okay, hey, bond investors, here's a product that you can actually buy, and you're regulated to buy, and it will convert into equity at these strike prices, and that equity will give you exposure to Bitcoin, which is a novel financial instrument that they have no exposure to. And so because of that, all these bond funds have been just swallowing up any convertible debt that Saylor has issued, even when the strikes are like insane. So like the most recent convertible debt issuance he just did, I think it was 3 billion, 2.9 to $3 billion, was over, first of all, it's oversubscribed on Monday. And so they had to extend it on Tuesday. That's why we had the pop, because they basically doubled the amount that they were offering it for. And then they even raised it to 3 billion, and that it got subscribed all the way. And it had a implied strike price on MSTR stock of like $675. And so that's still substantially, that's obviously like, 80% above where we are today. And those bond investors were happy to take that because again, they don't have any form of exposure to Bitcoin at all. And if they can get that through this convertible bond instrument, it's like a breath of fresh air. And they have so much capital to deploy. I mean, we're talking literal trillions. And so, there's also I've also saw a chart of the pricing of the convertible bond, and anyone who bought it in the last 2 years has done amazingly well. I think one of the convertible bonds was up like 102%, and so that's insane for a bond, right? Like
Yes.
that would be equivalent to buying like a 30-year treasury, at like 8 or 9%, and then having it rally to 1% within like a year. And so, that's it. You just don't normally see that happening, especially in the bond world, without taking on leverage. And so, that was the key that made me realize. I was like, okay, this is Saylor's, like, this is his calling card. This is you know, the secret that he's found out with the financial system. This is the linchpin to understanding this strategy is the convertible debt. Not even the ATMs. The ATMs, those are nice, issuing equity for cash to buy Bitcoin. That's almost like a non sequitur. It's like that's not that important. It's what's really important is the convertible bonds, because the convertible bonds are the key to all of this.
Now, speaking of the key to all of this, why is Michael Saylor's voice so fucking weird?
Oh, the He sounds kind of like a mouse almost.
Yeah, dude.
Yeah.
It's the anytime I hear him talk, I'm always just like, bro, there's a giant mismatch between the way that he looks and the way that he sounds. I find it exceedingly strange. It's kind of like Mike Tyson. Mike Tyson's another
Mhm.
one of those dudes. He just sounds so different than how he looks. I don't know. I find that pretty pretty curious. Now, what do you think about people's idea that essentially it's MicroStrategy is just like a big Ponzi scheme where sailors buying Bitcoin, so it drives Bitcoin up, that like that cycle essentially.
I don't think it's a Ponzi scheme, and there's several reasons why. For one, he actually has a revenue generating business on the bottom of it, and they're actually buying the Bitcoin. Where you can think of it more appropriately as is as like a siphon, right? So imagine the fiat system is like this giant pool of water, and up until now, there have been very few escape hatches. So again, if you're a regulated, hedge fund, mutual fund, managed money, like any sort of institution like that, you are limited in the amount of in the type and amount of investments you can make, right?
Mm-hmm.
So I mean, a commercial bank, they can't go out and buy Big Macs. They can't go out and buy um, most of the like exotic products that like hedge funds get into. They can only buy generally, commercial MBS, agency MBS, and treasury bonds. And so when you're looking at even the hedge fund world and you're seeing like all these institutions getting caught in this trap, it it makes sense that once this new siphon is discovered, all this capital that wants to flow into Bitcoin flows into it. And the ETFs, they are again, I was not bearish on MSTR, but I thought that the ETFs would eat up the MSTR premium this year. I thought it would all be gone, right? Because of the ETFs. But one of my friends on Twitter, Atlas, pointed out to me like, basically what Sailor's doing is a better version of the ETFs because instead of having, lockup periods and fund fees up front, um, he has a cash flowing business on the back end and they're just buying Bitcoin and they're issuing convertible debt to fund it, like I said, and getting all these bond funds in it. And they're able to tap into that market in a way and manage the product in a way that it's still just trading, it's still a stock, but it's just trading with Bitcoin and as like a levered Bitcoin proxy. And all these other traders are jumping in, trading it like a levered Bitcoin proxy, which even the ETFs don't really trade as, right? Because like, I mean, we saw that with Grayscale, right? The Grayscale ETF started to have a negative discount to NAV. So the ETF was getting shorted and shorted, and it was trading worse than just owning Bitcoin. But again, as an institution, you're trapped. You can't legally hold Bitcoin, on your balance sheet, or there's regulations on how much you can do. And so for them, it made sense to buy ETFs. But with Sailor here, it's like, why even own that if you can own MSTR as like a proxy?
Yeah, well, and it's also a good point just with respect to the underlying business, right? You mentioned that a couple times, but I think it's an important point. Is you're it's almost, I don't want to call it a two for one, but you do have a business that's also holding this asset that a lot of people are like really interested in.
Hmm.
So yeah, I think the movement's been, so then talk to me a little bit about the theory that there was a ATM today.
So, okay, so yeah, look at the 1 day chart. And what people were saying is that the depth of this correction and the violence of this correction was evidence. And again, it's all speculation, right? But typically, if Bitcoin rises while MSTR falls, historically that has been signs of ATM, of Sailor diluting so that he can buy Bitcoin, which makes sense, right? Because he's doing spot buys in the billions of dollars at a time. I think his last spot buy that I included in my research piece was like 2 billion, and he acquired 72,000 Bitcoin, I think it was. And that was between October 31st and November 10th. And so, he was just spot buying like 100 million a day of Bitcoin. And so we saw the Bitcoin price steadily rise. And then into that weekend of November 10th, the Bitcoin price gapped up. That was, right after the election, we saw the Bitcoin price gap from like 80,000 was like 75,000 all the way to 85,000 within the space of like a day or two. And then quickly after it breached 90,000, it's been trading, now it's at 98,000 as we talk today, or 97. And so, that divergence of the MSTR equity and Bitcoin has historically been when Saylor has been diluting to buy Bitcoin. And so today, since Bitcoin was rising, we broached 98K today, and the stock performed so poorly. The consensus was on Twitter that he must have tapped the ATM. But again, I maybe he did. The depth of this move though makes me think that there's also some options play going on. Not even to mention short sellers. I don't know if you saw this, but Citron Research entered a short position on MSTR today.
Aren't they like in jail? Isn't he busy like not being there?
Yeah, that's a good question. How's he trading?
What the fuck's
Andrew
he
left.
doing?
I don't know. Andrew Left has been charged with, market manipulation. So as far as I know, he's in process to, have a court hearing, but he's not convicted yet. So I think, as far as I know, he's out on bail, and so he's still trading,
Well,
I guess.
I think they kicked it to like 2025, didn't they?
Oh, they did. Of
Yeah.
course.
Yeah, because it was going to be a pretty quick trial, I think, or hearing, and then they moved it out. I mean, the options today look busy, but not crazy. There's a lot in the 22 nov. Yeah, that's interesting.
What about the overall volume? Can you look at that compared to the previous days? Like just
Yeah.
like stock volume, not just options.
Oh, yeah. We can take a look at that one sec. I want to see what the volatility looks like.
And what tool is this again?
This is Thinkorswim.
Okay.
What I'm looking at right now is just the volatility surface to get a sense of the relationship of what happened today and where they're pricing vol, which is very much to the call side, which is kind of interesting. But yeah, let's take a look at the volume. So volume today was 100 milli. The 5-day average is 56 mil. The 20-day average is 34 mil. And then the volume yesterday was 70 mil. And then the day before that was 51 mil. So huge expansion in the last few days across all of these.
Yeah. Yeah, and I saw yesterday that MSTR was the highest or the most traded stock on the New York Stock Exchange that day. And today, again, with the volume today being greater than yesterday, even people were speculating that this has to be the ATM hitting, and I think it's a valid hypothesis.
I mean, I think it's a great, I think that's a great call, because even if this is profit taking of some sort, which I'm sure some of it is, that's still a really heavy move on no news, into your broader point, when really the underlying asset that it's tied to had a pretty good day. So,
oh yeah, absolutely. I mean, we're at like 98K right now, right? As we speak.
Yep. So that's an interesting. Yeah, it's 98,770. So for sure. Mm-hmm. That's on micro, by the way. I think Bitcoin typically trades at a slightly edge premium to it. Yeah, interesting. Yeah. What did you make of our boy Daddy Gensler? You see that?
He's leaving. Hallelujah, man. Hallelujah. Praise the Lord.
So funny. Because at first there was a couple things people were asking, like, are you going to leave and stuff? He's like, nah, man, like, I think I'm good. It'll be all right. And then he's, what is it here? 20th. Funny timing.
20th, which that's the inauguration day, right? Yeah, I was going to say. Yep. Yeah.
Funny timing.
It is funny timing. I mean, look, like if you look back at his reign as SEC chair, I think he was an abject failure. I don't think anyone, I said this on Twitter, right? Like he must have been the most unpopular SEC chair in like recorded history, because he failed at every step of the way to protect investors. We saw, think about what's happened in the last 4 years, right? Under his reign. We had first the GameStop squeeze, which almost broke the clearing and settlement system, and then caused massive outrage at the shorting and FTD mechanism of our stock markets, and then more squeezes that he basically just left unattended and didn't even like consider.
Busy.
We
He's
had
busy. He's a busy man.
yeah, I know, but we had FTX and Celsius blow up and lose billions of dollars of customer crypto. And FTX was essentially running like a circular Ponzi scheme with Alameda Research. Um, and they were just sending their own money. Like they had no oversight, no regulation. They're in the Bahamas, and they had the green stamp of approval from Gary. I don't remember. I think FTX was one of the few exchanges to get like the green light from the SEC as like a broker dealer in crypto. Um, and of course, they were headquartered in the Bahamas and didn't even have, audited financials. And so it was insane that this was even allowed to happen. And then, you take this to, you know, you, you think about his failure overall, just in the crypto space generally. Like he pursued cases against Kim Kardashian, against Pete Davidson for pumping their crypto coins to their followers. And he did nothing when large institutions did the same thing. When VC funds, when private equity funds would buy into a crypto, pump in money, they'd have maybe 20% or 30% ownership, right, of the float. And they would dump on retail immediately when it starts to pump, and they'd get their bags out and they would make profits, and then they'd roll it into the next one. And as far as I know, he didn't prosecute a single VC fund or private equity fund. And there are at least a dozen that engaged in these practices of buying, going to find a crypto company, pumping up their crypto, promoting it on social media, paying influencers to pimp to shill it, and then dumping on retail over and over again. And so, abjectly, like he failed in every sense of the word. And if you think about it too, like one of the things that would have been his mandate was to provide regulatory clarity on crypto markets, right? Is Ethereum a security or not? Is all the altcoins securities or not? Is Bitcoin a commodity or not? And if they are, how should the, decentralized exchanges, how should crypto exchanges like Coinbase, how should they be regulated? How should we deal with, derivatives and swaps, etc.? He didn't provide basically any regulatory clarity on the matter of any of those questions. And so, I think people are glad to see him go. And I am one of those for sure.
Well, I personally am sad because he led the agency through a robust rulemaking agenda to enhance efficiency. Couldn't you just see that efficiency leaking out of everywhere? I was like, when I looked at the SEC, I was like, you guys are super efficient now. So obviously the impact is just tremendous. And then also we have to give a massive shout out to Lauren, because now I'm also bummed because we do lose Mr. Burns from The Simpsons being able to be present in our government. They are, I mean, the nose is close, but yeah, Lauren, that's a really fantastic correlation that you just drew there between Gensler and Burns. I never thought of that. They do kind of look similar.
Oh, for sure. No, it's definitely there's a similarity there for a reason, right?
Now, here's the real question. Why is it, and why would somebody, like, if you have hair like this, why not just
cut it off, man.
fucking let it go? Like, I can't imagine anybody thinks that this is a good look. The horseshoe?
Yeah.
Right?
Yeah, it's horrible. Just go bald, man.
Just fucking, it happens. It's okay to be, he's 67. Like, he made it. He's old. He did a good job. He's still alive. But yeah, I feel like I never understand the let me hold on to the hair that's on the side of my head only. I mean, get fucking hair plugs, do something, put a wig on. But yeah, I can't get behind that. I can't get behind that vibe personally. It's just not for me.
Yeah, I
Let's
agree with
grab
you.
let's grab this real quick and let's just kind of poke through and see what else anything else stick out to you today. There's a couple things I saw that were kind of interesting, but
Well, so to further pull the thread on the Gensler thing, I think Trump announced his next pick um, for SEC chair, and it was someone who I've never heard before, but apparently they're extremely pro crypto, and they own some personally. And I think what's interesting too is I don't know if you've looked at the picks for this administration, but the Treasury Secretary that he's nominated is also owns Bitcoin. And
who
RFK,
did,
the
who did Trump pick?
I don't remember their name. It was announced today, I thought. Uh, I don't see it.
Yeah,
Yeah,
it
that
says
one.
CB.
Videos. Trump considers crypto lawyer for SEC chair. That's who it is.
Howard who?
I don't know. I've never heard of them before.
Does anybody know? Harry should send him some razors so he can go full chrome dome and embrace the baldness. I think Lance, that's the right idea for Gary Gensler. And I mean, he's gonna need a new job, right? So he's getting out in 20. He's gonna have to promote some shit. So maybe he could do some promos for Harry's razors.
Oh,
But
for sure.
what the fuck is this guy's name? I just want to see what the rest of this says. All right, I'm gonna click and I'm gonna be fast. Pause.
Howard
Howard
Lutnick. Yeah.
Lutnick. Let's do some Howard Lutnick digging. Oh hell yeah, I like that picture.
Oh wait, maybe here. Let me look.
He's from Jericho, New York. That Lawrence says any worries about the government getting involved with crypto? I think so. But I also think it's a necessary evil. I think the government being involved with anything will undoubtedly add some hurdles and bureaucracy to it. But I think for the broader adoption of the cryptocurrency, it like literally has to happen. But curious, your case, Mr. PB.
Yeah, I mean, I think this has been the problem that we've been fighting, right, for the last uh 4 or 5 years or so, especially this cycle. What?
Look at this headline. That's a specific ass headline, dog.
Well, it's the times of Israel, my friend.
Yeah, I know. It's on fleek. It's on brand. That's just I'm like scrolling through, looking about like the Trump pick, and then boom, who are the Jews in Trump's inner circle? Sorry, back to you. That just completely took me.
That's funny. Yeah, no, I think look, I think the issue that we've been fighting for the last 4 years or so is like regulatory clarity, right? Because
Yeah.
again, private equity funds, hedge funds, Jane Street has been able to jump in. They algo trade, better than any retail does, and they're able to basically scalp retail investors. And it's essentially the Wild West, right? No one knows what's going on. No one understands what the actual designation of these tokens are. They don't know if they're securities or if they're commodities or if there's something in between. And so that's created this, befuddled mess that has allowed smart players like hedge funds to step in and start scalping people, right? And
Mhm.
the amount of scams and just frauds in crypto is insane. And a lot of the times, investors will or founders will create a coin, do an ICO, it'll pump. Their VC investors will dump on them on retail. They'll dump. The project won't work out, quote unquote. They'll have technical problems, and then they'll make several hundred thousand, several $1 million, and then they'll just repeat it with the next token. And so they just rinse and repeat. And so there's several different, founders who've done this multiple times, and the fact that they're not prosecuted is bad because crypto, again, this is a new area that needs to be looked at in terms of, the legal and regulatory side to understand what are the rules, right? How do you How do you properly list an ICO? How do you give disclosures to clients? How do people buy it? How do people sell it? And how do we prevent market manipulation?
Yeah. And I'm really curious how fast that'll happen. I think it'll be front and center. And I think if we take a look at just cryptocurrency in general, it's obviously planning for a pretty quick assimilation. I wonder how quick it'll be. Mr. Igor says, where would your trailing stop be on MSTR? Mr. Igor, you already know how to answer this shit. It really depends entirely on like what you're doing. I don't know if you're running any sort of stop PB, but I think it's entirely relative to the trader in their position. I don't think like a spot for them.
I would have a stop at about 20% above where I got in, and so that's in the 370 range for me. And so I'm actually getting close. I mean, if it keeps falling, I might just get out and take profits, especially on the shorter. Like I told you, I have January calls, and so those ones have me a little more nervous than the June. And so I might take profits there at like plus 20% above where I got in, around like I think it was 320, 330.
Yeah, I think for me, it's just a function of following the trend. I have longer dated options, so I define the risk on the trade by the size. So I don't really care what it ends up doing. Obviously, I want it to go up, but I'm planning on generally letting it move. If it starts falling below, I would kind of use this volume node personally. So if it starts falling below here, like the 330 handle, then that's probably time for me to reposition. But one of the good parts is with the shorts against the longs, it helps offset some of it. So yeah, that's how I'm thinking of. Well, that's how we're both thinking of it, Mr. Igor. Archduke PC says, do you expect it to go down tomorrow more? That's a great question. I think from my perspective, it is a coin toss. Like I don't really feel that strong one way or the other about it. Most of the selling today stepped in at the morning, chilled out in the middle of the day, and then really stepped up towards the end of the day. But at the end of the day, there's a couple really big buy volumes stepping in front of the selling. So it wouldn't surprise me if it's stabilized personally somewhere in here. Like I don't know if it'll fall into this tomorrow. It could, but that's how I'm looking at it. What about you?
Yeah, that's what I was thinking as well. I mean, the volatility today was just so much, and it made sense given how far we'd run, right? In such short time. It's like every day was plus 10%, plus 15%, a few down days, and then plus 15%. Like it just was, it's too much too fast, right?
Yeah.
And so yeah,
Well, and that's
I think personally, I mean, maybe you can disagree with me on this, but I think personally we're going to trade in the low 400s here, high 300s, maybe for another week until Bitcoin makes another move.
yeah, it could. I honestly spend so little of my time trading trying to structure ideas based on like any sort of specifics like price targets and whatnot, just because I know generally it's a fool's errand. I look at trades in a probabilistic context, right? So I got in after it broke out here. So realistically, I'm trading the probability that the breakout continues. I've already scaled some out of the trade as it's obviously moving up. I typically will scale out after, depending on the duration of the trade. But if something's moving strong, I'll give it a week or so, and then I'll start sliding stops up. That'll cap me out. So I got taken out on a bit today, and I think of it as a probabilistic. What's the probability of this going up over a certain duration versus it going down? And I have to agree with you in terms of like the four handle. But one of the cool things is options can tell us things. So if we take a look at the probability of a touch with the one standard deviation move, really our one standard deviation range for the next 20 days, so about a trading month, is 770 down to 180. it's just massively volatile, right? That's why with
Mhm.
something like this, I purposely define size by what I get in at because of how these things can move. It's not like a standard momentum or drift play for me. It doesn't behave like that at all. You have to just buckle up for volatility because it's going to be there, I think.
Yeah, absolutely. And
Um,
what's interesting too to think is like, will will the additional or the additional Bitcoin that they keep buying, will it keep increasing their MNAV, right? Will
yeah,
they still have a premium? Like, how far
right,
can this premium go? And I was reading one analyst who was saying, because he was like, look, some people are like, this was just a week ago, and there's like they're trading at 2.3, premium above NAV. Like, is this? He said a lot of people said this isn't worth it, and he's like, I have a completely different view. Again, you have to view this from the lens of the convertible debt and the equity. The real value play here is not even the Bitcoin; it's their ability to raise more capital and buy Bitcoin. It's like the future
right,
Bitcoin. It's like future
right,
Bitcoin cash flows. And so, if you look at
right,
it that way, it's the premium above NAV isn't so insane. At least on the face of it, because that's what all the bears have been using. They've been saying, look, premium above NAV is way too high. This is insane. Like, why are you paying $2.3 for a single, dollar of Bitcoin? That's too much. And again, I agree. If you're thinking of this as just a Bitcoin play, if you want exposure to Bitcoin as a retail investor, just buy Bitcoin, dude. Like,
right,
MSTR is not, you're not buying the equity, and you're not actually going to receive Bitcoin for the equity. What you're buying MSTR for is like a leveraged Bitcoin proxy. Again, proxy being the key word. It's not actually, like self-custodial Bitcoin, because even
right,
MicroStrategy doesn't have it on their, like, they don't self-custody it. They have Coinbase as their custodian.
right. Yeah, it's interesting too because when I look at movements for some like how did it do right after the election? What was that, the fifth into the sixth, right? So like a bit of a jump here. And then I mean just from the eighth into the 11th, I mean massive gap. So I mean, looking at it from the perspective of a leveraged Bitcoin play, do you know if anybody has done homework on what the actual correlation and leverage ratio is compared from this to Bitcoin? I've not looked at it.
Um, no, I haven't seen that yet. I mean, I was just looking like, and I think that the problem is the number keeps changing. I posted, like, you look at right now, like, Bitcoin is up 43% in this month. MSTR is up 88%, but that's after correction. It was at the top was up
Right.
152%. So, it ranges from, I would say, anywhere from 2 to 3x. But again, you can see like that a lot of that performance comes in like bursts, right?
Yeah.
So if you look at and I actually have it up on TradingView right now. I'm looking
Yeah. You
at
can share if you
Bitcoin
want.
versus, sure, I can share. You want me to share my screen? Uh this
Also, what is the plant in the vase behind you? Is it like dead grass from outside or?
Oh, these
Yep. The tall one.
um those are, I think they're, yeah, no, those are both dead plants. That's plastic.
Good.
They're
Yeah.
just they're just like set
Fake.
pieces. Yeah, they're
Got it.
fake.
Well, they're very nice set pieces. As you could tell, I thought it was like some wheat that you got from outside and put in a nice little container. But okay, fine.
No, there's not much wheat up here in the Pacific Northwest. It's mostly
I've
just
been been
Douglas
let
fir
down,
trees and moss. Yeah. Sorry. Sorry to let you down.
crushed.
But yeah. But exactly. So like, look, if you can see here, like, you know, here MSTR is just trading, in a range, and you see Bitcoin kind of trading in a range, and it seems that like it's basically trading as this leveraged Bitcoin proxy with maybe just like a 2x. So Bitcoin you know, goes up a bit, loses half its gains, and then the same thing happens for MSTR. Like, it's obviously acting much more volatile, but then here you see like around early September, or early October, late September, the breakout truly begins, because this is where Saylor starts to accelerate his strategy, right? Saylor starts to, they issued that 42 billion. I don't know if you saw that on October 30th. They issued a plan to, um, they submitted a plan to issue $42 billion of capital to buy Bitcoin, 21 billion of debt, and 21 billion of equity.
Mhm.
which is the biggest, the most amount that they've ever done. And so you can see that, this breakout really beginning here and the outperformance really starting. And this volatility is just getting insane up until here. And these all these candles are, or like the day before, is the issuance of either more equity or more debt. So over here, the 10th, the 8th, the 9th, and the 10th, they were issuing equity to buy Bitcoin. And then here's where they opened up their convertible debt offering. And then yesterday, of course, this big candle where we got to what, 400 or whatever on Wednesday. Um,
Mhm.
490. That was when we had the convertible debt and it was oversubscribed so much that they expanded the offering and we're like, fuck it, we're doubling it. We're just going to smash buy more Bitcoin with this. And the market just loved that.
Right.
And so, yeah, like this, it's hard to give, because again, this isn't a managed product, right? What most people are thinking is, okay, this is a managed product, just like a 2x VIX ETF, or if you trade 2x oil futures ETF or whatever. I used to trade JNUG, which was a levered gold ETF. And so they structure it in a way that you're getting uh, leveraged exposure to the gold miners or gold futures. But this is not structured in the same way. It's still a stock, right? This is still
Right.
just a company.
Yep.
And so at some points, the leverage is 2x, and sometimes it's something like, 4x, right? If
Right.
we're just using these numbers as proxies, it's up 198% right now, even with the correction, and Bitcoin's up 67. And so, that's what, four, yeah, three, that's three plus change, right? Because that'd be 180% roughly. So yeah, it's 3x at least, and then up here would be 4x or 4.5. So yeah, like the correlation will change, but it will, I think, continue to trade as this leveraged Bitcoin proxy. And I think that correlation will get stronger and stronger the more Bitcoin they buy.
Right. Yeah. Yeah. That's kind of the interesting part with stuff like this that moves like this with relation to some sort of underlying asset is quantifying the relationship. Because from a trading perspective, stable trading relationships are super important as you're building a portfolio and whatnot. That's why for me, this is more of a directional breakout play, not trying to play it really for anything else. Because I feel like it's difficult to understand the way it behaves, even from a beta perspective. The beta moves a lot.
Absolutely. Yeah. And that's what I'm saying. Like, this isn't easy to understand the same way that like a structured ETF would be, where you have a fund managers and analysts who actively work daily to make sure that the 2x exposure is capped. Right. So this
Right.
is, again, there's a bit of a speculative play here, right? You're assuming that Saylor can continue to run this strategy and that nothing also happens with the underlying business, right? So,
Now, um, is there a reason why you refuse to finish the update on your browser, or are you just
oh, I
are you
hate that. Yeah, dude.
finishing Google?
Every like 2 days, it's asking for an update, and I don't know if anyone else in the audience has seen this, but dude, it's like fucking ridiculous. You update it, and it's like a day later, it's like new update. I'm like, dude, how many updates does Chrome need? Like, you
I
guys are
see.
insane.
Yeah,
Yeah.
well, I mean, it's difficult because they need to maintain as close of a relationship with all of your data as humanly possible, and they got to update what they're in your pockets for essentially. And then the other question is one does naturally have to ask, if you were to have a bookmark folder that's titled survival, like what kind of
Yeah.
stuff would somebody find in such a bookmark? Is it like human survival? Is it survival as like a species? Is it like what's their survival angle that we're taking here?
No, I used to be into prepping. And so I used to
Like
watch Doomsday
doomsday prepping
Preppers,
and
and yeah, well, maybe not Doomsday, but just like, yeah, buying, bug out bags, having extra food and
yeah.
water, getting bows and arrows and knives and stuff like that. So I think, I mean, dude, I haven't even looked at this in forever. I think it's
One of
just,
one of
yeah,
my
it's all
big
bug out stuff.
recommendation, like the bows and arrows stuff is good, but just if you like the idea of prepping, think about like getting into like reloading or something. So otherwise you're gonna run around with a bow and arrow and just get shot up by somebody like me that has a gun and can make my own ammo. it would just be really frustrating because you have your nice bug out bag, you have all your stuff, exactly as it should be, and then you're like, let me go, smack this squirrel with this nice bow and arrow, and then you're like, well, damn, this didn't work out great.
Yeah, no, that's why I do own firearms. I mean, there's a reason why I buy firearms. I'm not going to sit here and just have none at all, because I think that firearms are essential to survival. But my family, unfortunately, is not very pro firearms. So I'm like the only one in the family who owns any.
Zachary says, WTF, primers are the first to go. Primers are the first to go for what? Oh, you mean like first to go if there's like a craze? Yeah, that's why like any good reloader use stockpile. None of us that reload like what we need on like a daily basis and go to Walmart and go get your stuff. It's like a compulsive disorder that you have to have copious amounts. Like I primers, they run out if you're a casual, but if not, I could eat them and still run out. Like there's just no way. This is a hell of a chart.
Oh, this is like, dude, this is like 30 or 40 charts in one. I mean, we have like so much stuff here. Like all these, it's layered. There's like 50. It's really unorganized. It's really unorganized, but it's like all the Fed asset holdings, credit facilities, all that stuff. It's all like layered over each other. You can see here like reserves, treasury securities. And then we have the actual balance sheet of the Fed with, the lines as the assets and the areas as the liabilities. So that way we can kind of like live version see what happens as the Fed eases. But here I can expand it a little bit because that makes it a little easier to see. There's your dog. Nice.
Yeah, he's here. He likes to, so he's in the process of getting out of the office, but before I let him out, I always show him to everybody so that he can say hi. But he likes the balance sheet.
Nice. Oh, he does? Okay.
Yeah, he's known for his economic prowess.
He's known for his takes on the Fed and reserve creation.
He's very critical, I've learned. He's very, very critical. He's not like a c'est la vie kind of dog. He's like a get in your shit kind of dog.
Gotcha. Makes sense.
Oh. You heard we have like in IR, speaking of survival, in my driveway, we live up a super steep driveway. We're kind of like on the edge of a nature preserve. So I set up an IR beam that as soon as it's broken, it's kind of like a doorbell, but like it's way down on the driveway just so that we can have a little bit of advance warning. But like any dog, he's learned as soon as he hears that, he fucking loses standard dog behavior.
Did he hear something? Did someone come up the driveway?
That's exactly correct.
Okay.
I think Mel's goes and like sits at the door and is like whimpering and crying, losing his mind. Dog stuff. Lawrence says Thor is the portfolio manager. He is the one that definitely gets all of it done. I think I'm just kind of the monkey on the keyboard, and I think he's the one that's generating the ideas.
Yeah, he seems like a good trading buddy. Yeah.
What kind of are you, dog or cat guy?
Oh, dogs for sure.
Okay.
Can't be a cat, dude. That's just no. I mean, I like cats. Look, the cats are fine, but they're assholes and they don't really give a shit about you, is my experience. So I don't love them.
Some cats are like really cool companions. My uncle, I like all animals, but I definitely prefer dogs. But my uncle had like this really cool cat that I remember was like it was like a partner almost. Like they were very, very cool with one another. Like one of the things the cat would do is my uncle would put the food out for the cat and the cat wouldn't eat until my uncle started eating his food. And then the cat would eat his food. So it's like some of them are straight homies. But to your point, I think most of them couldn't possibly care less about people. And actually, in one of my college classes, they even posed the argument as far as that cats are just kind of like homicidal murderers, that the only reason why they don't kill humans is we're too big. Otherwise, they would happily kill us.
Yeah, that is extremely accurate.
Yeah, I feel
I
like it's pretty.
mean, they kill animals for fun even. Like, have you seen videos of them
That's
like,
exactly that. Yeah,
yeah.
that was exactly the point. Is that they just want to go murder things. Which I
Mhm.
mean, I can understand their perspective on it, but yeah, I don't know if it is necessarily the right pet. Especially, well, I mean, fuck, man. Back to Mike Tyson, he literally had tiger, fucking tiger.
Yeah, yeah. Tyson though gets a pass, right?
Well,
He's just such a
great.
character that he's different. He's in a different league, man.
Yeah, I think
Um,
that's completely fair.
yeah. But
Um,
going back to this,
yeah,
so yeah, I wanted to talk about kind of my framework also for thinking about Bitcoin, right? Because
hell yeah.
one of the things that's been happening, right, in the last 2 years is there's, at least reportedly, the Fed has been tapering, right? They've been reducing their balance sheet.
Do
They
you
should be
not
tightening
believe that they
monetary
are?
policy. No, I don't believe that they are.
Okay.
Not truly. And
Got
well, again, I'll caveat that, right, with are they tapering in the traditional way? Sure. Are they finding new ways to offset that with additional liquidity and stop the taper? Yes, as well.
I see. Got
Because
it.
again, the balance sheet, if we go back, right, like during the 2008 financial crisis, um, you literally never saw a time when reverse repo um, was was basically anything. Like it was de minimis. It was tiny. I mean, and now we started the taper with 2.2 trillion in reverse repo, or 2.14 trillion at the peak. And so what's happened is, okay, so since 2008, right, we've had, I would say, categorical change in the monetary system where what used to be, like fundamental growth that was mostly correlated with economic statistics. So if real wages grew or if overall GDP, we had a positive print, if we had low inflation numbers, good jobs numbers, the stock market would rise. And if the inverse happens, obviously it would fall. That kind of got overtaken by just the sheer size of the programs that the Fed was doing. So starting in 2008 and up until 2010 was QE1, then we had QE2 and Operation Twist in 2013. Then we tried to taper in 2018. That failed miserably, and it quickly caused a stock market rout with the stock market down 20% by December of 2018. And then, we had the repo crisis the next year. And so the Fed quickly found out that like tapering on a broad scale, tapering hard, was something that they could not do anymore because the system since 2008 has become so dependent on liquidity that um, they need people to keep holding their equities. And in order to keep holding their equities, there needs to be enough liquidity in the system. Reserves, bank reserves cannot fall too much. And so with this most recent, easing cycle, we had 120 billion a month of the Fed doing QE from 2020 to 2022. And at the top, right, we have this so June 2022 is the absolute end of QE4, which is also known as QE infinity. And then we begin QT. And in the space of, a year or so, by by late September to, early Jan, this is like the low point for reserves. We taper down. This is coincident with the crises in the yen and the pound and the euro. So all of the major currencies started to have crises around this time frame as the Fed started cutting bank reserves down. And then 2 months later, right, we have SVB blow up and basically cause a mini banking panic in California. And so the Fed quickly stopped tapering in real terms. So reserves bottomed out of around 2.96 trillion, and then they were able to rally back up to 3.3 trillion. And the same is true with the TGA. The TGA, which is the government spending account, also, grew from 500 billion to where it sits like 750, 790 billion today. And again, okay, so TGA pre 2008 was never more than like $10 billion total each week. It was never more than that. And then post 2008, it was never more than about, you average around 40 to 50. And then on the high end, it would get to like 100. And we're sitting at a place where we have 8 times that now, the absolute peak in the pre COVID years. Um, And it's just like it's just like a widely accepted thing. It's like everyone's like, oh well, this is the way the system works now. And so what the Fed did, and it's really kind of genius, right, is they had this overnight reverse repo window, which was flush with cash. And as QE began, they just started running down the amount of money in the reverse repo. And so this was adding liquidity, adding $2 trillion of liquidity essentially to the banking system as they were tapering. And so overall liquidity, as this goes down, if overall liquidity doesn't fall or bank reserves don't fall by more than 2 trillion, then that means overall liquidity is flat or up. And so
I
that's
see.
what we've seen. So like liquidity bottomed in like 2022 and 2023, and then it's either flat or slightly rising from then. And that's why, because people keep asking me like, why are stocks still doing so good? Like why was crypto like not as slammed as it could have been? Well, the answer is the liquidity picture, right? We did see withdrawal of liquidity. We did see bank reserves fall, but they didn't fall as they should have with the true taper because we had this injection from reverse repo and the TGA being filled up to offset that, right? And we also had, which isn't this isn't portrayed here, but we also had the BTFP, which was the Bank Term Funding Program, which was lending to bonds at par value, not market value to banks, and that peaked out around I think 160 billion. And the product is or the program is now being wound down. But this is one of the metrics I think about when I try to anticipate future Bitcoin moves because historically, the Fed's balance sheet has been incredibly correlated with Bitcoin. Um, actually, let me find it. I have a chart. It's in one of my most recent threads. I'll scroll through and find it. It was, yeah, here it's in one of these. Here it is. So hopefully you can see that.
Hmm.
But it's a global liquidity index. So this is all central banks. We're talking, Fed, ECB, Bank of Japan, Bank of Canada, Bank of China, and Bank of England. And we use that to create a global liquidity measure. And then you also overlay that with Bitcoin. And you can see that Bitcoin trades as this like levered proxy to global liquidity. And with the Fed beginning their cutting cycle, this year, and historically they've never been able to get to zero without doing QE. And same with all the other central banks, by the way. Bank of Canada started cutting rates this summer. Um, ECB started cutting rates, and Bank of Japan is the only one that's raised rates, and they're in their own monetary mayhem. But with this backdrop, we're seeing a macro picture where Bitcoin and liquidity in general is poised to rally significantly. And
Now,
so, whenever liquidity rallies, I mean that's positive for stocks, but it's also positive, especially for Bitcoin.
and how do you describe the relationship between liquidity and Bitcoin? Like, why do you believe that there's the correlation there is, at least as far as you see here?
Sure. So the reason why is because it's the way that QE functions. So when there's an injection of liquidity, it swells up all the commercial bank and financial institution balance sheets, right? And so they start allocating. And usually what they're doing is they're buying bonds, buying treasury bills, right? They're buying like equities and derivatives. The issue comes is when some of that liquidity starts to flow into Bitcoin or into crypto in general, the Bitcoin market cap is so small that it's like hypersensitive to any additional net increase in liquidity. And so like let's say the Fed increases liquidity tomorrow by $100 billion. And again, because of regulatory constraints and because of um, just investing dynamics, how markets work, most of that will flow into bonds and equities and a small portion of that will flow into crypto. But because the crypto market cap is so small, even now, like the total market cap is below 5 trillion, I think. Which, when we're talking about these bond markets, these global bond and equity markets, like that's fucking nothing.
Yep.
So that means that it just moves things like very, very quickly. And so but it also works on the inverse too, right? Like as you can see here, during the taper, as global liquidity came and bottomed, and you can see here if you draw a line down, that's September or October of 2022 when global liquidity bottoms right here. That's about where Bitcoin bottoms, and then we see rallying, come up from here. And so it's not a day-to-day correlation the same way that most people think, oh, liquidity increases 100 billion today, Bitcoin's going to go buy $1 billion today. It's not that immediate. There's always a lag, but it's a pretty clear indicator, especially with like a 1 to 2 month, if you put a 1 to 2 month window around it.
It's interesting. I haven't like actually measured the relationship myself, but this kind of gives me some ideas on potentially doing that just literally out of sheer curiosity.
You,
Because the tricky part I think is correlation can span a lot of different theaters. And like we can see things that might move together a lot, but the overall like strength, duration, and the veracity of the correlation is of most interesting. Like that's definitely what's most interesting to me. So you give me a couple ideas here for some homework.
Yeah, you should totally do it. I mean, from what I had found, I mean, what the only one I've really done it on is stocks, but stocks had like something like it's like 0.89 correlation with the Fed balance sheet or with global liquidity. So it's like insanely strong with the equities. Bitcoin
And
obviously being like a levered version of QQQ almost is even more would probably have a lower correlation just because of the size of the moves, but and also
what
just
do
volatility with Bitcoin.
what do you use for in this study here for global liquidity?
So this is Fed balance sheet minus reverse repo minus TGA, um, plus ECB
One second.
plus Bank of England plus Bank of Japan plus Bank of Canada. I can send you the formulas after too if
Yeah,
you
if you
want
can,
that.
that would be great. Because and is there a reason why you limit to those banks versus just more holistic, like using anything from um, China, Russia, anything like that?
Well, China has an interesting effect because China has a closed capital count, so
Yep.
it's much more difficult for money to like if China eases, it will boost their own stock market, and I've written about that, but the
Yep.
liquidity is much slower and much less of
Yep.
it is able to escape
Okay.
China. And
So you're
so
focusing
same with
on
Russia and same with Russia.
got it. So
Yeah,
that and that's so
I'm
that's the reason why
focusing
you
on
exonerated those.
yeah, and I'm
Okay.
also focusing on G7 countries, right? So it's like because again, people could ask, well, why don't you include, why don't you include the Bank of Turkey or the Central Bank of Peru? Or it's like, yeah, but those are not major global players on the global stage, and so we don't like again, we could include them, but they would essentially because they act in unison generally with most other central banks. I don't think they'd add too much nuance or complexity. Plus, those countries are much smaller, right? Like the only ones that really matter are basically the G7, you know, China, Japan, the US, UK, Europe. That's like the big dogs. That gets you 85 or 90% of the picture.
Yeah, and that's actually why I'm so interested about China too, because China is a massive, massive size.
Hmm.
So I wonder because it would also be cool to kind of do a regression between the individual constituents and to do a relationship between those. So yeah, if you can send me the formula that you're using and then with those banks and stuff, um, I can recreate a data set and just kind of poke through it. It's super interesting to me.
Oh, absolutely. And if you're interested in learning more about liquidity, this guy Michael Howell, he runs a fund called Cross Border Capital, and he has this Substack called Liquidity Wars. Really good
Mhm.
read. It's like $75 a month or something. It's kind of pricey, but really good read. And his fund has like a team of analysts, and they go together and they create this global liquidity index, and it incorporates not only central banks, which was what mine is, but incorporates corporate bond liquidity, equity liquidity, like sovereign wealth funds, and it's looking at like the amount of money in all types of institutions, not only central banks. And so they found that this liquidity is cyclical, and so we bottomed in late 2022, and we're on the verge of a move up. Which kind of makes sense when you think about it, right? If the central banks are trying to fight the business cycle by easing into recessions and then tightening into um, economic strength, liquidity would be cyclical and it would be counter-cyclical to the business cycle. So liquidity would increase when we're in a recession, and liquidity would fall when we're booming, at least theoretically.
Yeah, that part makes a ton of sense to me. The like one of the things I'm interested is dissecting the relationship between liquidity and other factors across like a long horizon like this.
Mhm.
Because yeah, just the relationship between liquidity and equities, bonds, I find anytime I've looked at it, there's periods where the relationship is very strong, and then there's periods where it's not. And I haven't looked at it holistically over like that, right? That was going back into the 60s. Like
Mhm.
that's actually a really, really cool thing to study. What car was that? Was that a
Hmm?
Skyline?
Oh, this is it's an AI picture actually.
Or is that a 240? It looks like
What is it?
a looks like a 240 SX.
I think
I'm
it
not big
is, yeah.
into the I'm not big into the imports. I'm not the guy. I'm an American car guy. So, but there's a bunch of dudes in my car club that they're honestly, I think they might be slightly mentally handicapped because they're like Rain Man when it comes to imports. They know all of them. It's actually very cool. But that looks like a 240 of some sort.
Yeah. Yeah, no, this is just an AI picture. Um,
Got it.
yeah,
Well,
this is one
you
of my
teased me.
threads that I got.
That's the second
Yeah,
time you teased me. You teased me with your
sorry.
fucking with your plant in the back and now the car.
Yeah, exactly. And this is the chart I was talking about, the S&P 500 divided by the Fed balance sheet, and you can
Yeah.
see like that that breakdown post 2008, right? This falls off a cliff. I mean, obviously, this is the first wave of QE, just driving the ratio down, and then it basically
Mhm.
stays flat. It's like muted this entire time. And here you can see there's no correlation, very low correlation. Now it's just like almost 1 to 1, right? This is I mean, it varies. You're right. Like it's not a set correlation, but over the last 12 years, I think it was the correlation ran at like 0.88, like I said, 0.89. So it's very high correlated. And so with the Fed pretending, or at least planning to ease again, if they're going to continue this cutting cycle, I think, equities broadly are going to rally pretty hard from here.
Yeah. Well, I mean, I'm really I'm taken a bit aback by the pullback that equities have had given the post election or the post election move, and then obviously there's a bit of pensiveness around the rate environment.
Mhm.
So I'm kind of watching that really closely because the way that I position obviously depends a lot on that. Right now, funny enough, my broader portfolio is a little bit less correlated with the S&P 500 because I've moved into a lot of individual names playing more siloed ideas as compared to what I very often will do, which will be different forms of momentum following, either futures with the indices and stuff like that. Like right now, the only futures I have on are gold and net gas. And
Mm.
gold has been good, and net gas has been a little bit slower, but also good. So, yeah, the market's just been very strange to me here. Um, I don't know.
So take me through your, like, I know we're also coming up on time, but I'm kind of curious, like, take me through your portfolio construction. Are you doing, mainly equities? I mean, it sounds like you're also doing commodities, futures. Like, what's your
Mhm.
split between all the different like sectors you could do?
It's not a defined split in any way. The way that I look at trading is my job is to look at what the market is doing and try to find the best opportunities defined as return on risk. So, for example, like the nat gas trade, I don't have any special feelings towards nat gas from a broader perspective. I do have some broader, like longer range ideas about it, but that none of that really impacts the trade that I have on. Literally, the trade that I have on the front month futures, they come down in 4 days, and then the next expiration after that is like 35 days out. So what I do is I split my portfolio into two components. I have a core allocation and a speculative allocation. And the core allocation is generally things in index ETFs of some sort. It's stuff that I can hold into perpetuity as needed. So I normally will trade things like the covered strangle in there. And then I'll also trend follow the pretty much anything that I can detect a trend on, which is mostly done through futures, mostly for leverage, efficiency, and then also tax treatment. And then, which is funny because I remember right before we started, I was telling you how I would never make a trade decision off of taxes.
Off of taxes.
Yep. But then the speculative allocation is really wherever it looks like there's opportunity. So that's stuff like trading risk premiums in earnings releases. It's trading the breakout that I see in MSTR. It's looking for mergers, acquisitions, unusual options activity, really anything that fits in with some of my broader strategies that looks like a decent return on the risk. And then I've guided down my portfolio return targets, which has been the paradox of the century, because I've had literally the best returns I've ever had last year, and then this year won't exceed it, but it will be the second best, I think. And these are the 2 years that I've guided down my return targets the most. So I don't really worry about how much of the count I'm using. I just worry about finding good opportunities and then sizing each opportunity as it should be. The portfolio sits anywhere from 2 holdings to 150, 200 holdings. I would say average holding is probably sub 50. I think that's probably about right.
Okay, gotcha. And I'm
All over
I'm
the
also
place.
I'm also curious, what are your biggest winners for this year? Because most portfolios follow the Pareto principle, where if your whole portfolio is up 20% a year, like 18% of that 20%, right? 90% of the return is from like 5 stocks out of like 100. So,
Yeah, I don't track the way that I trade actually doesn't behave like that. And it's because I don't really weight down in individual stocks too much, although I do have a couple, like APP is one of them that I got in on the 11th of September and I'm still going in it. So that one kind of breaks that mold a little bit. But what I do is I typically break down returns by strategy and allocation. So for me, like the primary strategies that have been driving returns this year have been momentum following in futures along with covered strangle. Right now, I'm using 2 leveraged ETFs for an example. I'm actually doing like a live portfolio with it just to give people ideas on how to do something like that. I'll probably end it come the end of the year. But so that's the covered strangle core allocation right now. And then from a speculative allocation, what's the primary driver is ratio diagonals. So kind of that strategy I was talking to you about, and that's just directionally trading breakouts and stuff like that. So, but it's split across quite a lot because when I trade stuff like the ratio call diagonal on breakouts, it's a really like lukewarm win rate. It's like just over 50%. It's like 54%. So I lose a lot. So what that means is it's really a strategy that's based on a lot of trades going on. I'm grinding out tons of trades. So, yeah.
so this is like a full-time thing for you then, basically.
It's one of my primary income methods for sure. Yeah, it's been like that for a while. The way that I trade, and I try to remind people of this, like good trading is super easy. So the amount of time it takes me to do this stuff genuinely, it's not a lot of time. I spend a lot of time looking at markets just because I'm fucking infatuated by them. If I wanted to derive most of the return that I could, I easily could do it 2 hours a week, genuinely. And that's not being like salesman-y or trying to make a YouTube title. It's like legitimately the case. All of the work for most of my systems is done already. It's putting together tons and tons of data, running tons of different permutations, and then finding stuff that's robust over long durations. So yeah, it's the stuff that's time consuming really is pet projects. Like I'm picking up the stuff that I was talking to you about, right? Like when you're talking about the liquidity and the relationship between some of those different entities, that's the shit I'll end up spending time on. And it's just because I'm fucking interested in it. I think it's cool. Yeah.
Yeah, I know. I feel that. I'm the same way, man. Once you get me
Yeah.
curious on something, I can't just like, not research it. So,
Yeah. Well, awesome, man. Oh, Cryptato, thank you so much for sending us $50. some of that will go to the DoorDash driver tonight, and then obviously PB, I'll hook you up with the other half of it. But thank you very much, Cryptato, for that. Awesome catching up, dude. My dinner just got here, so I'm gonna go stuff my fat face. But great catching up with you and great chatting with everybody.
Of course. Thank you so much for having me again. Yeah, I'm excited to see what this next week brings for MSTR and Bitcoin and GME as well. We didn't even touch GME, but I think we can do that next week. Earnings is coming up, so that might be a good time to do a spaces for sure.
Yeah, awesome. All right, guys. Thanks for hanging out. Thanks for being real, being outlier. We'll see you guys later. Hey.